Alrighty, folks, we are doing my favorite episode of the week. This is where Mark goes through and gets the spicy, deeper meaning questions, and I get to react. And apparently, we're going to start with one that basically calls me an idiot and a moron. So let's see what happens.
Yeah, so this one was from your daily financial news, warning about the 20% market crash.
Mhm.
Hypnotic69 says, thanks for making a claim and then providing the most garbage analysis possible to support your claim. What a waste of time.
Thanks for watching. Thanks for leaving a comment. I get stuff like this all the time. Lots of haters out there. But when you step back, and I'm guessing he's going to be talking about the one with where I said Morgan Stanley and I don't know, JP Morgan or someone said a stock crash was coming. But oh, by the way, it was coming in the next 12 to 24 months. I'm going to guess that's the show that he was talking about. And I can only share with the data I read. And I read, I don't know, I read 60 to 90 minutes every morning. And if you watch the daily financial news, it's really a rundown of headlines. I try to tie together themes for folks, but I'm not trying to do a deep down drill down into why JP Morgan or Morgan Stanley said a 20% crash was coming and when it's coming and all of that. I'm just trying to tell you what headlines caught my attention. I do it 5 days a week, so hopefully you can see a theme, and by watching you can see what's going on across the country. And if you're looking for some deeper analysis on something, sorry, didn't mean to disappoint you. But I'm not trying to take one in the daily financial news. I'm not trying to take one topic or one question and net it out to some end degree. I'm reading, I don't know, at least 15 and probably closer to 25 different articles every morning. And I'm sharing with you what I thought was most important. So if that disappoints you, sorry.
Yeah, so this one was from Peter Bedford, who also has a lot of great comments on a lot of your videos. But this was on your video with the thoughts on the government. And this one was, we saw Mandami just win the mayor race in New York. But this one talks about the widening wealth gap equals socialism will become much more popular.
I think he's right. I think, when I think about what happened Tuesday, in my opinion, the Republicans were asleep at the wheel. They were not listening to Americans. They were watching the chaos and kind of cheering on chaos and not realizing that most Americans are hurting. And, the K-shaped economy, which we've been talking about for 2 or 3 years, I share numbers probably weekly, if not certainly monthly, about the top 20 or the top 30% doing okay and everybody else is hurting. And, you don't win elections that way. You don't win elections by catering to the top 20%, right? This is just mathematically a way to lose. And, Mandani, I think, is a great example of, running a campaign. I think he ran a great campaign. And believe me, I am not a socialist. But again, the goal of politicians is to win the election. That's the goal of a politician, win the election. It's not accomplish what I said. Like, for example, one of the things Mandani said is he wants to do rent freezes. Now, again, I have property in New York. My daughter lives there. And New York has rent stabilized units, which he could impact. But he's not going to rent freeze market rate rents. That's not how it works. He doesn't have the power to do that. That's a state level, right? He has no power to do that. Raising taxes. He has no power to do that. It's a governor thing, not a mayor thing. But again, his job was to win. It wasn't to accomplish what he said. Those are disconnected things. So, I think the Republicans need to wake up and stop playing in the chaos and the zoo and the clown show. And they need to realize that most people are hurting. And I think the Democrats learned that at least in some cities, and probably the big cities, Mandani's message worked. It worked, right? Free buses, free rent, freeze rent, free groceries. He doesn't have the power to do any of those things, but he won the young vote by like 40 points, right? The young folks are hurting today. And if you can't deal with affordability and cost of life and give the young folks hope, you're going to lose every election. So, 2025, the Dems learn something, and hopefully the Republicans wake up. Otherwise, the Dems are going to run them over, right? The midterm election could be a massacre if the Republicans keep playing in the top 20% and fanning the clown show. It'll be another embarrassment. So we'll see. But yeah, this is real, this wealth divide, this K-shaped economy. It's only gotten worse. And, we need to talk about it. Yeah. So it's a problem.
You're talking about it getting worse. I think you touched on it yesterday about is 40 years old is now the age for the first time home
Median
buyer.
age first time. That's so sad.
And then we also had Jared speak on Sunday about
Yep.
rent by room. Is this the answer? But so on that video, Trailer Trash to Trailer Cash posted, in my opinion, this will help, but I think the answer is mobile homes. They are the only affordable housing left. So I'm not even sure about your portfolio. Have you ever had mobile homes, or do you see this as the answer?
They're not really popular in California, at least in the markets I'm in. I'm sure they're popular in some places. But again, I think anything that can address affordable homes is an answer. ADUs, trailer parks, tiny homes. We have an affordability crisis. And yeah, I mean, I know there's plenty of people that are doing really well with trailer parks in mobile homes. We need somebody to step up and marshal a 1950s level national housing thing. It needs to be massive. We need to build communities of smaller homes. I mean, that was I was at Resi Day last year. Shout out Lance Lambert, and all the speakers were asked if they had a magic wand, what would they do? And my answer was I would build smaller homes. I would love the average square foot home to currently, I think it's at 1950, which is down from 2300. I'd love it to get to like 1500 or 1550. That just means we're building lots of 900 square foot homes. And right now it's not being done because it's not profitable. But we need to figure that out. We just need to figure that out. So yeah, there's lots of partial answers, but we need, if I was a Republican running, that would be what I would be going after, is we're going to tackle this somehow, some way. And whether that's tiny houses, mobile homes, ADUs, all the above, we got to fix affordability. We got to get hope back.
Yeah, so I think, part of the discussion too always has to go back to, government spending and where a lot of the problems do come from. But in your video, is the financial system breaking again? All-Nighter Hider does comment. Government spending is less consumption and more misallocation of scarce resources since they're not accountable to a P&L. That may be why markets ramp up during a shutdown. Less manipulation and more free market. What's your thoughts on that?
Well, the first part of that is dead on. The second part of that is interesting to think about. He could be onto something.
Yeah.
I'd have to think about that more. But yeah, it's really interesting because, again, when you think about, it'll be interesting to see the numbers, because the government's still spending, right? We're still running a deficit. But GDP is going to be down something like $14 billion a day. And now we're at day 36 or 37 or whatever it is. And yeah, it's going to hit GDP. Some people say to the tune of 1 to 1.5%, right? Q4 GDP will be hit negatively. So I don't know. I'd have to think about that more. I mean, it kind of logically makes sense, but I'd have to see I'd have to look at that from other angles. So I'm not sure.
I've done my job. I finally got stumped you a little bit where you actually have to. I feel I've done my job now.
Nice. Oh, video over.
Yeah. Finally. Okay. Well, this is another good one from Punakar. Like I said, I love his comments and your videos too. So this one was the 5 essential facts about real estate commissions. This was your video with Dana from Hemlane.
Yep.
But he does say, first, I think mortgage brokers, title companies, and escrow companies can be much more easily replaced with tech, especially AI. Secondly, if tech companies want to get into real estate agent world, it should first cater to experienced investors, get that right, then expand.
Yeah, I think Punakar was dead on with this one. Again, if I remember that conversation with Dana, we were really talking about tech coming in and trying to solve the buyer-seller side. And he's absolutely right. He is so dead on with this one. when you come in and you try to tackle an equation with members who don't participate a lot, right? The average agent does like 1.5 transactions a year. The average home buyer does 1 transaction a decade. And when you're looking to kind of streamline that scarce buy sell, it's impossible. However, to his point is, okay, let's go tackle the market where there's 1,000 players. And these 1,000 players do 5 to 10 or 20 transactions a year. Let's go make that efficient. Let's go learn about that. Let's figure out how tech can help those people. And then you expand from there. He's absolutely right. If you really want to figure out the buy sell process, you go to one side of the equation, the buyers who are buying, lots of units a year, and lots could be 5, right? It doesn't have to be a crazy number. And you try to solve it for them. Then you learn what you learn, and then you move on. I think that's exactly how you tackle the problem. He's right.
So this one, you kind of touched on it also. Bitcoin has been taking it on the chin recently, and some people said it would not go under 100K,
Yeah,
and it
I heard
briefly
that, yeah.
did.
Yep.
But in your daily financial news, the crypto hack, Dylan Pettyjohn comments, the crypto hack is interesting. If you're a bull, it's a buying opportunity. Bitcoin is down 18% within the past 30 days. I own none, but I'm slowly being convinced that it's something we need.
Well, again, if you are a bull, of course you think any dip's a buying opportunity. I think that's what we've learned the last 3 or 4 years is, buy the dip, and there's other sayings there, but yeah, I mean, if you are a bull on an asset, yeah, any chance you can get a sale, you jump in, dollar cost average. It makes complete sense. I do think if you step back and look at the bigger picture, the crypto hack was a negative, right? In order for crypto and specifically Bitcoin to go to $1 million a coin, like all these, perma bulls think, whether you like it or not, you have to get the masses involved. And the masses don't get involved with something where they think $100 million could be hacked. Now, again, it wasn't Bitcoin. It was Ethereum. It was something called Balancer, which I have no idea what it is. But again, it doesn't matter. The average person hears hack and crypto, and they're like, nope, see, I knew it was a scam. So I would tell you it's a negative, not a positive. Again, if you look long term, right? Bitcoin's been around for a long time. The early movers are already there. The early adopters are already there. You need the masses, and you don't get the masses with a headline that says $100 million was hacked. That's just not how it works. So, I mean, you could certainly, if you're a bull, I mean, to a bull, everything's a bull. That's why they're called maxis. And crypto fixes, like the answer to everything, like I'm hungry, crypto fixes that. I'm like, are you freaking kidding me? Like, really? That's just retarded. And yeah, it's I think on the net, the hack's a negative on in total. I think the hack's a negative.
I'm going to actually share one of my comments right now. So this one was in your
Okay.
video of stocks versus real estate, where Taylor from Life Goal Investing.
Yeah.
But I'm not sure if everyone heard of it. I love that soap analogy that he used.
Oh, yeah.
Remember?
Yeah, I do.
Yeah, can you kind of touch on how that related to that video on stocks and about what the
Yeah.
soap
So,
analogy was?
yeah. So Taylor brought up a great story, which I had never heard before. So I'm glad you brought this up. So basically Taylor's point, and again, I'll be butchering it, but hopefully I get it close and you can tell me if I'm wrong. But basically, you can look at your stock account like soap. And the more you touch it, the more it disappears. Think about that. When you're using soap and you're touching it, soap is disappearing. If you don't touch it, it doesn't really disappear. In Taylor's point, the reason the average investor loses is they touch the soap a lot, right? The other analogy, I think Dion told me this one time, right? If you want to know who the best stock traders are, dead people, because they don't trade. They don't touch the soap. So yeah, it's funny to think about the soap analogy. It was well done by Taylor.
And also on that video, there was a great comment by Chris Wissing. He says, my accountant told me many years ago to get to 4 rentals. The return on each should add up to my house payment for my primary. I would live free. That's the win.
Yeah. I mean, at the end of the day, getting wealthy is remarkably simple. You can get there with 4. You reduce your life expenses. You let, assets inflate over time, pay down debt, have somebody else pay down the debt, and you win. I mean, again, I'm not here. I don't preach replace your income. I don't preach burn the boats. I replace have a better future, right? Let's get wealthy together. It takes a decade. The first 5 years suck, but it works. It just works. It's It's tried and true. David Green and Rob Abasola talked about on their Bigger Pockets Got Fired or whatever it was video saying, Chad Carson and one rental at a time are the way to go. It just is. It's simple. It's boring. It's straightforward. It's something we can all do. It's not super sexy. It's not Burr. It's not arbitrage. It's not, syndication. It's just buying one at a time for, one every other year or whatever it is. But it works.
It's funny you brought that video up because we've all been jabbing Millennial Mike a little bit because he made a special guest appearance on that video. But I actually did a live stream with Mike yesterday, so maybe we'll bring up one of the things he mentioned actually yesterday. So he was talking about, somebody asked him a question, what does his end goal or portfolio look like? And he said he's just going to keep growing. He wants it huge. He feels like, the way the government's going, he wants to have more influence in a sense. And he's not saying Elon Musk type, but he's saying, you look at Elon, he has all this money, he can control certain things, right? So that's kind of his end goal. And he was mentioning you, how maybe a couple of years ago, it felt like you were just not complacent, but you're happy where you're at.
Yeah.
And now he heard you talking about, maybe I'm going to transition and do what I did to increase my portfolio. So where's that different thought process coming now?
Well, again, I think one of the beauties of life, frankly, is, everybody runs their own race. And I think it's very fair to say, and I think I've been clear, 2022 was a bad year for me because I didn't grow. And, if you look at the year, it was great. Did all kinds of vacations and bought a house and did all these things. But I didn't grow. I didn't there's nothing I can look back on and say that made it a great year. You could call that complacent. You can call that whatever you want. I just sat down. I'd been running a race really hard for 20 to 30 years. I'd gotten enough and I sat down. Olivia and I both sat down and we enjoyed looking at the horizon. And it was fun. Probably did that for a couple of years, to Mike's point. However, when I look at what's coming, I really do see an opportunity, probably in 26, to once again sell overinflated assets and transition into troubled assets. And I'll do it. I mean, if you're gonna give me the board and I could win the game relatively easy, why wouldn't I? So yeah, I mean, there's a chance we add hundreds of units over the next, I don't know, 24, 27 months, something like that. It's possible.
Oh, that's going to be interesting to see. You're talking about growth and comfort. So actually, this was a comment on one of my shorts on YouTube, but it was taken from our videos together. And this individual says, growth is on the other side of comfort. So that's what you were talking about in the reel. But it says, that is an awesome statement. I love it. I think you have the title for your next book. You're the best, Uber. Any thoughts of another book coming out?
Yeah, I mean, there's definitely another book in me. And it's going to be about the everyday wealth builder. And it will certainly have themes like that for sure. I really do think the everyday wealth builder, when I'm 90 plus, I hope that's, like today, one rental at a time, most people will, certainly if you're in real estate, you go, hey, that's Zuber. My hope is in the next couple of decades, this everyday wealth builder hat or message does the same thing. I think that would be good because real estate's only one way to build wealth. You can do it with businesses. You can do it with stocks. You can do it with crypto. You can do it with classic cars, sports cars. I don't care what it is. I've seen people get wealthy in the strangest ways. Just find your thing. Blocking and tackling, sacrifice, live below your means, invest, wait a decade. So yeah, there's another book in me for sure. I don't know when, but yeah, there's definitely one coming. Yeah.
All right. So this one is so I want to remind everyone why they need to join school. There's so much help there. A lot of people, getting information, sharing their journey. So this individual actually commented on one of your recent videos. This is Jane Mag03. She does say, I have a question that comes with a complicated situation. Do I need to be a member of your school to get feedback, or can I email you? And you did reply to her, just email me.
Yeah.
But I also noticed, so she did reach out to me and she did join school.
Oh,
And then
cool.
she also messaged me the question she does have for you. I gave
Okay.
her my thoughts on it. I also reached out to Derek, that ADU guy, because this is
Hmm.
kind of an ADU question. So I also got her
Okay.
Derek's kind of feedback, but she also
Nice.
wants to hear your feedback on it.
Okay.
So she says, I am currently in escrow on a property that has an unpermitted but nicely done detached studio ADU in the backyard. I
Okay.
called the city and they confirmed that the last permit pulled was for the garage with washer dryer hookups. No permits were ever issued for converting part of it into a studio.
Hmm.
The current owner bought the house with the ADU already there and has successfully rented it out to a travel professionals. My
Hmm.
lender's appraisal actually came in 15,000 over the purchase price, and we've already paid for the appraisal and inspections. A broker mentioned that I could still rent the studio even though it's unpermitted, but it makes me feel uneasy. I'd eventually like to get it permitted to add its own address and increase the property's value. The studio is nicely done, has its own entrance, and is fully fenced, and the main property includes paid off solar panels at closing.
Huh.
So she's kind of just asking, what would you consider this as a red flag, still a solid investment? Would you move forward or safer
So
to back out? Yeah.
yeah, so this is really a risk tolerance question, which is probably not the answer she wants, but it is the answer. So again, that unpermitted ADU or garage conversion. Um, so now the city knows about it now, right? Because again, you made a phone call, so the city's aware. That doesn't mean anything. The city may or may not do anything. Um, it sounded like this, the city in Fresno also is going after short-term rentals with taxes. So the fact that this has been rented before probably is on somebody else's radar. So, when I think about this, the one that I always go back to, and I had this conversation with Derek one time, the ADU guy, is he goes, the problem with garage conversions is the foundation. And that's the problem, right? Typically speaking, and again, I don't know this one from Adam, but typically speaking, the foundation on a garage is 4 to 6 inches, and the typical foundation of a house is, I don't know, 18 to 24. It's just significantly different. And you can't undo that. I mean, you can't undo that, right? That's a problem. So again, it doesn't mean anything. It doesn't mean it's going to be a problem, but the city could come by and make it a problem if they wanted to. So, I don't know what I mean. I would love to hear what Derek had to say, but I'm always reminded of that talk with Derek because I have owned. Let me think. Do I own any today? I don't think I own any today. I might have one today that kind of had that ADU. So I used to buy them all the time, but I've had one. I had one back in the day get scraped. It was a garage conversion done poorly, where the city got involved and I had to scrape it. Right, that wasn't fun. So not only I didn't even get to convert it back to a garage. Right, I had to take the whole thing down. Um, and I'm not saying that's going to happen. I'm just saying that's the worst case scenario. So what did Derek have to say?
He told her look into some of these codes, certain things. He was talking about like if she's going to house hack and if she's in the ADU, then she kind of eliminates a lot of the risk because now
Hmm.
the tenant will be on the single family home side.
Oh, that
So
makes
she's
sense.
taking yeah, but a lot of it same to your point is risk tolerance and the fact that are you prepared if the city does want to do
Yeah.
something? So, but yeah, so another reason to join school. I mean, that's the
There
type
you
of,
go.
people are going to reach out and find you answers or solutions or get you help.
Yep.
But this one is something you reposted on X, and I think a lot of people need to hear this. But this is from the Phi couple. It says, we
Okay. Yeah.
skipped our honeymoon and bought a rental instead. A
Yes.
year later, that rental paid for a 2-week honeymoon. 4 years later, it helped us leave our 9 to 5 jobs. And you said one rental at a time.
It's just a simple process. Again, delayed gratification, live below your means, sacrifice. It's not a 4-letter word, but it leads to great things. And in this case, a short-term sacrifice leads to long-term wealth. They've already used it to get a 2-week vacation. They used it to help retire early. They'll use it for their kids, college fund. This is just the game, folks. You can, you know, don't hate the player, hate the game, right? This is the game. Play the game, right? Inflation is a feature, not a bug. The rules are simple. Play the game. Don't just rail against the machine. It's getting wealthy is 3 steps. It's a simple process.
All right. Any chance of you joining Rumble with Millennial Mike? He's been trying to promote and tell us that we should be all getting on Rumble.
I have no interest in another platform.
Yeah.
I don't even know what Rumble is.
It's like a free speech platform. He's like, you want to be the first in, right? Because it hasn't taken off like the other platforms. So he's
Yeah.
trying to transition a lot to that
Okay.
side.
All right. Good for him.
But yes, that's all I got for this week. I just want to let you know, I think people are people are excited about the event. It's about 3 months away.
Less than 100 tickets.
Yeah.
Less than 100 tickets. Let's go. Let's sell it out.
All right.
Fun.
Yeah, that's all
All
I
right,
got
Mark.
for this week.
Thank you, buddy. Take care. Have a good day.
Thanks. Bye.
Bye.